Where do you find it? In the blackboard.
One, we finished.
It's the same place.
It's not there? It should be there. If it is not, it is. Well, one of you were in the same place where I got it. Okay, week one. It's. Well, you gotta thank yourself. I didn't even help you. No, I said I didn't even help you. You found it yourself. It's good. All right, so here we go. September,
September 1st.
as of September 1, 2014, they reported retained earnings of 282. During the month, they had $40,000 of revenues, 24,000 expenses, purchased equipment for 10,000 and paid dividends of 4,000. How much is the balance in retained earnings? So which is the one thing that doesn't matter for this problem? Which information is irrelevant for this question? No, that is very irrelevant.
Equipment.
Buying the equipment has no effect on owner's equity at all.
Right.
So therefore, remember the boot camp example where we said, you look at the column for retained earnings as part of the statement of stockholders' equity. So in that we had a retained earnings column. So retained earnings follows this rule. Retained earnings. The capital stock was one column. The second column was retained earnings. This question pertains to the second column. How that number moved. Okay. So retained earnings beginning is something. To that you add net income,
Net profit.
and then subtract the dividends. That gives you what? Retained earnings ending. So the retained earnings ending is beginning plus the profits for the period minus the dividends for the period. That's your ending retained earnings. So in this particular problem, their retained earnings beginning was 282,000. All right. Then their profits were 40 minus 24.
16,000.
So net income is $40,000 revenues minus $24,000 in expenses, and that is $16,000. Right? Everybody with me?
Yes, sir.
All right. Then they had, the next one was purchased equipment for 10,000. That doesn't show up here at all, so
No.
we ignore it. And then they paid dividends of 4,000. So the dividends of 4,000 is subtracted. So that is 282 plus 16 minus 4, which is 294,000. So that's the answer. So 294 is the answer. And the fact that they say credit, that just means that it is the balance in that account. So that means in general, being owner's equity, it should usually show more credit than debit. Because credit is the increasing side. So anytime there is an increasing side to an account, that side will be the normal balance, because that's what makes the account bigger. So normally that account should show a credit balance, so that's why they call it 294,000 credit. 2. A payment of a portion of accounts payable will not affect total assets, will increase liabilities, will not affect stockholders' equity, and it will
Decrease net income.
Will it decrease net income? If you pay your supplier, is your profit going down? When you pay your supplier, what are you doing?
You're paying a liability.
Paying a liability, correct. So what are the two accounts involved in paying a liability?
Cash and liability.
So where is net income there?
Sure.
Net income involves revenues and expenses. If revenues and expenses are not involved,
But decrease liabilities.
Yeah, go ahead.
It decreased liabilities, not
Say that
increase. Decrease liabilities, not increase.
That's good. Very good. So that choice is ruled out too. So what is the choice that is not true though? What is the correct choice now? So we've already eliminated 2.
Not affect stockholders' equity.
It's gonna affect your assets, yeah, you're right.
Yes, because when you pay, cash is going down, so total assets are affected. So what is the one that is still remaining? We're down to
See?
C, not affect stockholders' equity. That's what it is.
Yes.
You're reducing cash and you're reducing liability. The stockholders' equity.
Your
cannot be affected.
equity is the same.
So therefore, the answer here for number 2 is C. Does not affect stockholders' equity.
You said it's not increasing liability, it's decreasing liability.
Yes, that is correct.
Decreasing.
That's why that choice is wrong. Yes. Collection of a $600 accounts receivable increases. So which choice is right for 3? So when you collect receivables, what's going on?
Increase an asset.
Decrease,
and you decrease liability.
increase an asset.
Wait,
No.
no, no.
Decrease liability, no. Decrease liability.
You
Decrease
decrease the asset
asset.
and you reduce the amount that's owed to you in the accounts receivable. So you receive it.
You got money.
You increase your asset, decrease your
Yeah, but don't forget, think about the sheet. Where do you put the other, what kind of balance? Where would you put it?
There's nothing to do with liabilities.
There you go. You got it.
your asset.
You got it. This has nothing to do with liabilities. folks.
No.